Meeting of the Financial Services and Multi-Line Issues Committee. We have three topics in front of us, one of which the first topic we're going to push off to the spring meeting in Charlotte, so we'll just be taking up topic B and topic C. At this time, I would entertain a motion to waive the quorum.
So moved.
I have a motion and a second. All in favor? Aye. And I would also entertain a motion to approve the meetings from the July meeting in Newport.
Second.
I have a motion and a second. All in favor?
Aye.
Motion is passed. Okay, like I said, Representative Jordan has agreed to push his e-commerce model act off until the spring meeting in Charlotte. So we're going to move along actually to topic number C first, which is discussion on NCOIL's e-titling model act, which is being sponsored by Delegate Steve Westfall from West Virginia. Delegate Westfall, if you want to proceed.
Yes, thank you, Mr. Chairman. Pretty simple. I don't know if everybody can read, but this allows the department or requires the Department of Motor Vehicles or appropriate state agencies shall develop or utilize an existing electronic vehicle titling system in which motor vehicle title transactions, including without exception salvage, junk, and/or non-repairable titles. The system shall allow for the use of electronic signature and provide the submission of all required and/or associated documents electronic means. So it's pretty simple, just what it says it is.
Do we have any discussion from the members or anyone at the table that wants to? We have Jim Taylor, I believe, here. If you want to introduce yourself and
Thank you,
make a
Mr.
remark.
Chairman. Jim Taylor with Auto Data Direct, Tallahassee, Florida. We're kind of looking at a Class 3 miracle here, as Commissioner Sullivan mentioned earlier. Number one, to get out on time this evening, but number two, to transfer from a paper world to an electronic world. And it's quite amazing. For 20 years, the automobile industry around the country, particularly in 18 jurisdictions, have had the opportunity to do electronic transactions of their titles. And by that, they sell the car at the dealership, they get on their computer, they upload that information to the DMV electronically, they make images of the documents, submit those to the department electronically, and the titles are issued. No paper, no muss, no fuss. Unfortunately, that has not been the opportunity for the insurance industry. So the purpose of this language is to bring the insurance industry and this total loss salvage processing into the modern day world, such that documents can be signed electronically, they can be transmitted to the department electronically, titles issued, and the cars be sold at auction. It's really quite simple. It's not anything new. It's been used in multiple industries around the country, but it's time for the insurance industry to get that same opportunity. What makes this process so unique really is that it's very fast. Normally, if you're transmitting paper to a DMV, you're sending it via FedEx. That can take several days. DMV opens up the packages. They have to grade the paperwork. They make copies of that. They manually input the data into their own systems, generate a title, and send it back. That can take anywhere from 15 to 20 days, depending on the speed of the DMV. So with electronic processing, this could be done same day and even next day. It's that quick and that efficient. It's also accurate in the sense that the DMV personnel are not receiving paper forms, then re-entering that data into their database. Traditionally, the insurer or the dealer processing this creates an electronic file themselves, so they're doing the data input. They're providing the forms electronically, either by true electronic forms or they're scanning paper forms and sending those scans. So there's less data entry and error, so the titles get issued faster and more accurate. And really, it just becomes more efficient. If you can imagine the millions of paper documents that are FedEx between insurance carriers and the DMVs every month to process salvage titles, it's just mind-boggling. And when those papers get to the DMV, they ultimately have to be scanned and put into an electronic format anyway. So we're basically just moving that entire process from the paper to electronic. We're very fortunate this year that Florida took advantage of this. Florida has had an electronic platform called Electronic Filing System that has been in place for 20 years. However, it was solely for the use of the automobile dealer industry. So we're very fortunate with House Bill 1057 to allow that platform to be used by the insurance industry. And Florida is somewhat unique in that it has third-party vendors that actually work with the carriers and are that in-between between the carrier and the DMV. They are currently programming that at Florida Department of Highway Safety and Motor Vehicles, and we're looking at a June 2020 implementation. What we're excited about is that this model law is something that other jurisdictions can take a look at and see the success of other jurisdictions, whether it be Florida or Texas or Arizona, and move forward. So Delegate Westfall, we appreciate you sponsoring this language, and that's my comments.
Thank you. Next, we have Frank O'Brien, Vice President, State Government Relations with APCIA.
Thank you, Mr. Chairman. Frank O'Brien with the American Property Casualty Insurance Association. To use an old cliche, this is a win-win, if you will. Many of the Department of Motor Vehicles across the country are in the process of upgrading their existing computer systems in order to comply with the federal government's Real ID requirements. This provides us with a unique opportunity to move this process into the 21st century and to do what we're all familiar with, which is basically transmit documents electronically. The Model Act that you have before you is before you for exposure. There are a couple of technical issues that will probably need to be dealt with in terms of referencing some federal standards. This is a highly technical area, but it's also an area in which efficiencies would mean additional efficiencies for state government, for insurers, and ultimately will benefit consumers. And with that, Mr. Chairman, I'm happy to answer any questions.
Thank you. Do any of the committee members have questions for the panel or the sponsor? If not, that wraps up the discussion on the NCOIL E-Titling Model Act. I assume it's our intention to discuss further in Charlotte. Okay, thank you all for your participation. Up next, we'll move to item number B, discussion on NCOIL's Rebate Reform Model Act, sponsored by Representative Lehman. Representative Lehman.
Thank you, Mr. Chair. I'm anticipating that this will go as smoothly as the last one. Let me give a bit of background. This model is in response to some issues that came up at our Newport Beach meetings with Superintendent Chapa pointing out that there needs to be some potential changes coming to the rebate laws. We took that as a charge to draft some model language, and so that's what you have in front of you. The goals of this bill as it was drafted are to bring some uniformity to the world of rebating state by state. We all here applaud heavily the regulatory establishment of state regulation. What we have some concerns with is when there is such disparity among the different states when it comes to things in the world of rebating. So the goal of here was to both address how that may apply to agents, how that may apply to carriers. Again, it being in this business, I can guarantee you there are very few, and Superintendent or Commissioner Cameron can probably confirm this. I don't think any of the consumers complain about rebating. It is something that we foster upon ourselves to make sure we have fair competition. So there's a section here, Section 3 deals with more for the agents and allowing them permissible to have gifts, to have raffles, to have the giveaways without that that kind of that background of is it worth more than 58 cents and did you have them, whatever. So I think Section 3 pretty much clearly lays out, and a lot of this is modeled after Maine's current law, to allow just some of that flexibility kind of in the agency community. Section 4 gets into the value-added services. This is where you're getting, we've had so many conversations in the last several days or even meetings and last several days, today included, regarding the gig economy. And so with that comes a lot of product that is enhancing people's lives and the tie that has to insurance And so when we get into this issue of if I want to provide a product to someone that maybe monitors water in your basement, or maybe from a health insurance side monitors your health, your heart rate, and some things like that, maybe you're part of a wellness program. If that entity were to provide those goods, would that be considered rebating? We put this together under the scope of the fact that we want to make sure we're clear that it needs to be towards that issue. So I use the word exclusively. That has caused a little discomfort among those who may, on this panel, distinguished panel in front of me, push back on that a little bit, because that is a pretty narrow definition. So we'll have that discussion, but I think this was the portion that kind of could apply to both the agency side and the carrier side. And a lot of carriers are coming in Section 5 with services they're providing that are either free or they're less than the market value, especially maybe on the commercial side, where you're seeing them come in and provide either it might be back support on filing of different forms. You're seeing it with loss control services that may have a dollar amount, but they're just included in that product. Is that considered rebating? So those are all the things we've tried to address within this model. I will tell you, Mr. Chairman, that based on the input we've had, that we will not be moving this model out today. I think we're going to listen to some excellent input from those who have a stake in this, and then hopefully get it in a place where when we get to Charlotte, we can move this. So that being the case, the NEIC, this is on their radar. I know Commissioner Cameron will probably weigh in on that. And with that, I will turn it back over to you, Mr. Chairman, and the comments from the panel, and I will be listening intently.
Thank you, Representative Lehman. We do have 7 panelists signed up to speak on this issue. We'll start with Commissioner Dean Cameron, Director of the Ohio Department of Insurance.
Thank you. Thank you, Mr. Chairman. I'll try and be a little bit brief, but try and inform you of where we're at. And I appreciate Representative Lehman bringing the issue before you. And we would love to continue to collaborate with NCOIL on what this bill should look like. I think by and large, first of all, I need to say that the majority of insurance commissioners aren't really enforcing the existing law as it's written on the books. And that may be a sad commentary, but that's the reality. If we don't have a consumer complaining about it, or we don't have a situation, we're not going out trying to, really trying to enforce it. If we do see someone who's taking and paying for premium, or someone who's taking a more systemic approach where they're offering services for zero cost if the individuals will buy their insurance product, then that becomes a little bit of an issue for us as an illegal inducement under the Unfair Trade Practices Act. Most of the rebating laws that are around have been around for 100 years. Many states have adopted the Unfair Trade Practices Act, and they were established because we had a situation in the country where agents were figuring out ways to pay premium and signing people up who, without the consumer having to pay any premium for a period of time. And then after 1 year, they would drop off. We even had some pretty horrific cases in my state where people went to prison after doing that, and some of the other consequences that followed with it. It's clear to us that something needs to be done. We've had and frankly, we sort of got blindsided a little bit because our Innovation and Technology Task Force began to look at ways that that our insurance laws were barriers to technology and run headlong into rebating. And it sort of surprised us a little bit. But as Representative Lehman said, there are a number of items where it seems to make sense that we allow insurance companies and entities to offer those items. Wearables is an example. Monitors on people's pipes, flood monitors, etc. Those all ought to be allowable regardless of whether they meet a dollar threshold or not. Where I think we want to be a little bit careful is we don't want to open the barn door so wide that people can go back to the days when they are using and creating an unlevel playing field where they're using their commission dollars to pay for premium. And then if they sell so much business, they demand even higher commission, and it just creates an unlevel playing field and creates some company solvency issues. And really is harmful to consumers in the long run as well, because it creates a product that's higher priced. So we again, would love to continue to work with NCOIL and Representative Lehman. We do have a few states that have issued bulletins. And North Dakota, for example, just recently issued a new bulletin. A number of us are looking at it. We're also not, it's one of those things where we want to be careful about what we ask for and what we put out there, because right now, with the exception of what we see with wearables and some of the devices, it's not been a huge issue. So I'll maybe stop there and be happy to answer questions at the end as everybody else has talked, if you want to.
Thank you, Commissioner. Next, we have John Fielding, General Counsel, Council of Insurance Agents and Brokers.
Thank you. Excuse me. Thanks very much, Mr. Chairman. My name is John Fielding. I'm the General Counsel of the CIAB. I'm really happy you guys are taking this issue up. We really appreciate it. And we appreciate the draft language that's been posted. We look forward to making comments on it, on the specific language, which we will do in the coming weeks. But today I just wanted to provide a couple sort of higher level points to bring to your attention. First, as a bit of background, the council, the CIAB, our members are the largest brokers in the country and in the world, the big regional brokers, the big globals. We place over 90% of the commercial P&C in the country. And out of about 170 million or so lives that are in employer-sponsored plans, our members sell or consult about 70% of those policies. So we're coming from the commercial broker perspective, not personal lines, not the carriers. We have a different place in the marketplace from those players, and the rebating laws affect us differently. So we're really talking about business-to-business relationships here. Sophisticated commercial entities working with each other, wanting to provide the best services at the best price. And in the commercial space, the rebating laws aren't protecting the consumer. They're all about really turf protection, not solvency or consumer protection. They protect my members from having to compete, really. And in doing so, they harm commercial consumers not only on price, but by inhibiting innovation and service. So we don't think the government should pick winners and losers in this marketplace or tell consumers that they can't get a deal. And we think that for this reason, commercial brokerage at least should be carved out from the rebating prohibitions. And I've said this before. We talked about it earlier, and I submitted written comments on this generally. More specifically, a point that I wanted to mention is to ask you to keep in mind as you're looking at this language is that the rebating laws apply directly to brokers. They don't apply to us only by or through insurers with whom we might be working. Brokers have an independent obligations to comply with the law. The law applies directly to us. And we also have our own independent relationships with our clients, distinct and separate and apart from the insurer policyholder relationship. And that has to be reflected in the language of whatever laws, whatever models are enacted. These ongoing relationships begin before placement, and they can continue long after a policy is placed. They're generally related to insurance coverage, but they aren't necessarily related to an individual or a specific policy, nor are they limited to the specific sort of list of areas that are listed in the draft legislation, like loss control, prevention, things like that. They can be broader. It can apply to the whole relationship. So let me give you an example. The ACA was enacted 10 years ago. Obviously, it brought huge changes to the employer-sponsored marketplace. And in dealing with that, our members had to do a number of things. First, they had to educate their clients, the employers who provide coverage. They had to educate them about the law, about its implications for them, for their clients. So then they needed to figure out what problems, opportunities, and requirements the new legal structure created. Then they needed to help their clients execute and make those changes, because the employers didn't know what to do. So they looked to their brokers, their insurance professionals, to help them with it. And now, fast forward a couple of years, our members are helping their clients, execute and comply with the changes, the ongoing compliance, the other obligations arising from the law and other things, like the reporting requirements, like COBRA administration, enrollment, eligibility, things like that. And they want to help them more. They want to be able to help them more. We've seen even continued changes like the HRA and the HSA rules, where employers are looking to their brokers for help, for guidance to figure these things out. So commercial brokers are looking to be flexible. They want to have the freedom to work with their clients, their sophisticated commercial clients, on a business-to-business relationship, just like all parts of the marketplace do. They want to give them the services they want, like I said, at the prices they want. And so that's why we believe there should be a carve-out. We also finally think it's really important that you're focusing on this. We really appreciate it. The regulators are looking at it too. We think it's a great opportunity to make changes, to make the laws that are over 100 years old, that are in place in 48 states, really reflect the way the market looks today. So thank you. We look forward to the opportunity to work with you on this and provide some specific comments on the language.
Thank you. Up next, Frank O'Brien.
Thank you, Mr. Chairman. Again, Frank O'Brien with APCIA. First of all, I'd like to commend NCOIL for their actions in taking a look at this particular issue, and to note that the fact that we're here today talking about this particular issue is a direct result of the NCOIL process. Ever since the Chicago meeting, NCOIL's been taking a look at innovation, changes in the marketplace, fintech, insurtech, et cetera. And over the course of many sessions, it became clear that there were going to need to be, or there should be, a number of changes in order to enable the provision of additional services, additional products that, frankly, our customers are looking for. This is a prime example of that. I hate the phrase low-hanging fruit, because this discussion will tell you that this is perhaps medium-hanging fruit. It's certainly not low-hanging fruit. We're going to get into some discussions concerning some of the language, and I'll make a couple of points as well. But again, NCOIL should be commended for taking a look at this. One of the reasons why we're here is that our customers, whether you're a producer or you are an insurance company, our customers are looking to us to provide a certain level of expertise, because we're the experts in the insurance business. And as the marketplace evolves, people are beginning to say to us, why can't you help me? I don't understand why you can't help me with this particular problem. Whether it be the provision of information regarding the ACA, loss control services. And now, in this particular instance, we at APCIA had suggested some modest changes to the rebating laws so that we could introduce, or our member companies or the people that sell our products would have the opportunity to provide loss control related devices to consumers in an effort to assist them and to frankly assist us. As we went out into the states, and the commissioner is exactly correct, a lot of these laws have been on the books for 100 years or more. And they have now become weighed down with esoteric, somewhat ridiculous interpretations, and they've lost all contact with their historic underpinnings. They did begin in an attempt to prevent the practice of agents from rebating premium back to consumers. They've now morphed into an area where you come out with some really goofy kind of interpretations. For example, in my home state of Massachusetts, which has one of the most restrictive of these laws, the insurance commissioner at what point in time was required to actually opine that if you had a stress ball, it was okay for the consumer to take the stress ball off the counter at the agency but it was not okay for the producer to hand the stress ball to the consumer. Where does that make sense? Now, what you have before you today is a combination of some additional language that APCI has put out there, as well as some language that was put forward by Superintendent Chopper several meetings ago. It was my privilege to work with Superintendent Chopper at the time that that particular law went through in the state of Maine. And Superintendent Chopper told you, as I will again repeat, that we had liked to have that particular statute go a little further. What you have before you is a somewhat modest proposal that, in our view, tries to deal with the issues surrounding the traditional marketing practices, the pens, the tchotchkes, while at the same time also attempting to put in place some certainty, if you will, relative to loss control services, loss control devices, that sort of thing. Why do we need that if, and the commissioner to my right is exactly correct, we've got lots of states out there that are issuing bulletins. Well, you go in, you look at the statute says one thing, the bulletin may say another. This is an opportunity. This is perhaps a once-in-a-generation opportunity to provide some certainty and some clarity. One of the fundamental things that we like to do is, and one of the things my members tell me all the time is, just tell me what the rules of the road are. This is a chance, this is an opportunity to try to set forth some clear rules of the road. We've had a number of conversations. APCIA has had a number of conversations with the sponsor. We appreciate the open and frank lines of communication. We do have some concerns with the use of the word exclusive. We think the word exclusive would be better served if we had the word reasonable. We know that there are others. John has mentioned a few additional changes. We don't have any objections to those. The devil's always in the detail. I know that my friends on the life side will have some additional suggestions relative to the practices and products that they have. Again, the devil's in the details. One of the things I do want to emphasize on this is that NCOIL has been a leader on this issue. NCOIL will continue to be a leader on this issue. And your activity on this particular issue has been noticed and is branding NCOIL as a center where insurance innovation is taken seriously, insurance innovation from the statutory point of view is handled seriously, and you're thinking about it and you're acting on it. With that, Mr. Chairman, I'd be happy to answer any questions.
Thank you, Frank. Up next, we have Wes Bissett on behalf of the Independent Insurance Agents and Brokers of America.
Thank you, Mr. Chairman, and I would say good afternoon to all of you, but I think it's probably a good evening at this point. So thank you for the chance to comment briefly on the Big I's perspective on the proposal from Representative Lehman. I guess I'll say at the outset, as you might expect, the agent and broker community is very diverse. We have hundreds of thousands of members nationwide, so we don't have essentially a unanimous perspective on this issue, but I'll try to outline some areas where there seems to be generally more agreement among the agent broker community and perhaps give you some high-level things to contemplate. We, about 5 months ago, submitted more extensive written comments to the NAIC as part of a formal hearing that they had. Be happy to provide NCOIL with those to perhaps provide a little bit more context. But as a starting point, I want to observe that anti-rebating laws have and continue to serve a number of purposes. And one significant insurance treatise, and I hate to cite insurance treatises after 6 p.m., but they describe the sort of the purposes of anti-rebating laws this way. They point out, as we've heard, and as you all know, that one of the main purposes is to protect the solvency of the insurance company, but there are others, and they include to prevent unfair discrimination among insureds of the same class, protect the quality of service, avoid concentration of the market in a few insurance companies, and avoid unethical sales. So while there might not be a solvency benefit to the anti-rebating statutes, there are still some other purposes that remain relevant today and meaningful. And if they didn't exist, there would be the possibility for insurance players to perhaps absorb short-term losses and offer loss leader type products that arguably would provide a short-term benefit to consumers, but the long-term effects could be anti-competitive in nature. And we've seen there's been a lot of productive activity at the state level over the last 10 years or so. Most of it has taken the form of regs and regulatory bulletins. More recently, though, we have seen some statutory action that focus on some of the areas of Representative Lehman's proposal, targets establishing monetary thresholds and/or allowing the types of meaningful risk mitigation products and services that you've heard about. They're typically somewhat narrow, but we've seen states like Arizona, New Hampshire, and New Mexico and Pennsylvania act within the last couple of years. And I'll give you the specifics on a couple. In Pennsylvania, for example, that recently adopted law enables agents and companies to provide offerings that, quote, relate to loss control of the risk covered by the policy. Arizona law did something similar this year as well. And I know there's going to be an opportunity for a lot of more additional comment on Representative Lehman's proposal, but I do want to make some comments on that. I think he's right on. I think taking a fairly thoughtful and frankly pragmatic approach by not taking a chainsaw altogether to anti-rebating laws and sort of looking at the areas where it makes sense, where there's really a meaningful need to revise and examine those. And I think it's the right, and our members generally think it's the right approach. Focusing on things like risk mitigation and things that are tied to the actual insurance transaction makes sense, whereas offering things that really have no nexus to the insurance transaction may not be as warranted. Now, some of the folks on the panel have kind of made it seem like this is going to be no big deal, it's low-hanging fruit. It might be a little more challenging than that. I mean, there are some, I think, complex, potentially difficult public policy issues here, and this is going to involve line drawing in a way that might not be as easy as it sounds. I can give you different scenarios, and you might say, well, that one sounds okay, but that one sounds bad. But how you actually draft it in statutory language can be difficult. The one thing, it will follow up with more written comments, including some fine-tuning things to Section 4. I do think the provision that we kind of wonder and scratch our heads about the most would be Section 5, the offering of things that are sort of tangentially related. That might be an area where there's the most need for work. And if you did conclude ultimately that there's a need for that sort of third leg of the three-legged stool approach that this takes, one thing you might think about is making sure that that particular section can't be used, the offering of whatever product or service in that case, can't be conditioned on some subsequent event happening, buying insurance, appointing the person as your agent, some other thing. And we've seen some things in the marketplace recently where people were playing games with that, and that's an area where there might be a need for some focus in drafting. But we thank you, as others have, for taking this on. It's an issue, sort of one of those issues du jour. Lots of people on all sides are taking an interest in it, and we welcome, as always, NCOIL's involvement too. Thanks.
Thank you, Wes. Up next, Bernie Birnbaum, Director, Center of Economic Justice.
Thank you. So you might be surprised that we have a slightly different take on it than my colleagues to the right. You'd think from the description of my colleagues to the right that insurance companies have not been able to offer loss prevention services, and they're hogtied. They're literally sitting in a corner with their arms and legs tied up, unable to help their consumers. Well, insurance companies have been engaged in loss prevention with their policyholders for well over a century. Hartford Steam Boiler has been doing that. It's the foundation of their business. So it's a bit of a misnomer to say that the companies aren't able to offer loss prevention services. There are telematics programs out there for the auto, for the home. There are wearable devices that companies are using, and they're tied into the premiums that people pay. So I think we need to sort of get real about what the particular problem is. What APCIA has proposed is really a massive deregulation of insurance rating in the guise of let's help innovation. And we think that the issues that need to be addressed can be addressed much more narrowly, as Wes has suggested. So in terms of the proposed model, I guess the first thing we'd say is we'd ask you to work closely with the NAIC, because the NAIC is in the process of developing a model law also on this issue. And those are the things that the regulators bring to the table on that is, what they need in terms of tools to monitor this, what kind of regulatory authorities and resources are necessary to make sure that the things you don't want to happen, in fact, don't occur. So we'd urge you to do this, and there are some complicated issues, and I'm going to point out a couple. But I'm going to start by saying, first, get rid of the term value-added service. What you're talking about here is loss prevention service, loss prevention products and services. So call it that. The term value-added service is vague, and it could mean anything to anybody when what you're trying to do is promote loss prevention. So please use loss prevention products and services and not value-added. The second point I wanted to make is it's really important to distinguish between products and services that have a rate impact and those that don't. So for those of you who aren't familiar with it, there's something called the filed rate doctrine. And that protects insurance companies from challenges to their rates or their policy forms from consumers if those rates or policy forms have been filed with the insurance department. So once an insurance company files a rate with the department, even if a consumer thinks they're being gouged, they can't challenge that because the legislature has vested with the regulator the authority to review those rates. And it makes sense. So if you open up in this rebate reform model the ability to basically change what people pay for premiums by calling it a rebate, what you're doing is you're now opening up insurance companies to challenges. You're opening up the filed rate doctrine and you're eliminating that protection for insurance companies. And we don't want to see that. We think that the regulatory structure makes a lot of sense, and we don't want to see it disturbed. That's one of those issues that I think is a complication that you need to look at. The other thing, well, one other part here is you talk about, I think the term you use, well, Russ has already mentioned at least tangentially related to an insurance contract. In our view, it needs to be directly related to loss prevention services related to the perils that are covered by that contract. This isn't something where you can get sort of some minor relationship. It's got to be directly related to that. The other thing I wanted to mention on this was how we talk about similar treatment of consumers. I think the way this is said is the services are offered in the same terms to all potential insurance companies. So if I'm offering private flood insurance and the loss prevention service I'm offering or the product is a flood prevention device, is it sufficient to say I'm offering a flood prevention device to all potential customers when a customer with a low-value home might get something worth $150, where somebody who lives in a mansion might get something worth $5,000? Again, some details that I think need to be looked at. I'll finish up with just a couple of quick points. One is that the issue of unfair discrimination is real. As we enter into an era of big data, insurance companies have greater and greater ability to identify not just the current value of a customer, but what they like to call the lifetime value of a customer. So opening the door to sort of all sorts of rebates and incentives to people who they view as high-value customers as compared to people they view as low-value customers. We need to make sure that these products are, in fact, offered equally to all. And then I guess the last point I'll make has to do with sort of opening things up to the largest commercial brokers. The large-scale brokerage industry is incredibly concentrated. 4 brokers hold a tremendous market share. They hold tremendous market power. And the idea of saying, well, we're going to unleash those folks to use that tremendous market power where they have tens of billions of dollars of revenue each year to sort of use those funds to compete for business. We've seen that. We've seen what happens with that. 14 years ago, the New York Attorney General entered into $100 million, billion-dollar settlements with the largest brokers for bid rigging, which is not unrelated to the types of things that this rebate reform could unleash. So we thank you for your efforts at closing the protection gap. We thank you for your support of innovation. We ask you to work with the NAIC on this because there are some complicated issues surrounding this, and we want to make sure that you do focus on the protection gap and you don't unleash a lot of unfair discrimination that could occur. Thank you.
Thank you, Bernie. Up next, Aaron Collins with NAMIC.
Thank you, Mr. Chairman. Aaron Collins with the National Association of Mutual Insurance Companies. I want to echo a couple of comments from my colleagues and again, thank the sponsor and the other members of NCOIL for pursuing this activity. And then I think I'll take the opportunity to unsurprisingly agree with Mr. Birnbaum that we don't agree on some of these points. So we look forward to the chance to work with the sponsor. We do think that there are a couple of opportunities, as several folks have mentioned, for some language changes that may offer some clarity and ease of use in terms of getting these mitigation areas, especially in the value-added service division, to the policyholders. I would also note that for us, we believe that especially in reference to Section 4 and value-added service, that there's enough specificity here and will be in the future that should that value-added service meet, or the product or whatever it is, the tool, meet this statutory definition of a value-added service, that it shouldn't then go through another regulatory process contained within the filing, that if it meets the standard within the statute, that should be sufficient. On that end, I would note the wisdom of the sponsor in having this be a standalone bill that doesn't open up different sections of the code. We think that is a strong approach that is not necessarily being taken in other spaces. So we would encourage you to continue upon that path. In terms of comments of the impact and the intent of this legislation, I think it's important to note there's nothing Machiavellian here. This is about trying to provide value-added service and answer, as my colleague Mr. O'Brien noted, a call from consumers to pair with their insurance companies, so matching policyholders to the people they know the most about insurance to help them. The end game here is to reduce the risk of loss, and I think we're all on the same page there. And the last thing I would note is the lens in which we should look at this issue, as well as any other issue where we're talking about offering of any product to the consumers. I would note that it's a misnomer, this concept of there being a protection gap. That's what we have in the insurance system, is a series of products Each consumer has the ability to choose the products that they want for the level of coverage that they want. So the concept of that gap isn't present here in this legislation or any other piece of legislation we're discussing. So with that, happy to answer questions at the end.
Thank you, Aaron. The final panelist this afternoon is Karen Melchert with the American Council of Life Insurance.
Good afternoon. Thank you very much, Mr. Chairman. I am Karen Melchert with the American Council of Life Insurers, and I thank Representative Lehman for bringing this to NCOIL's attention and for the willingness to work with all of us here to really achieve something that can right the ship on this issue. From life insurance, we come at it from a different perspective because we don't do a whole lot of risk mitigation or loss control services. So we've offered suggested tweaks to the language that is before you. I'm just going to run through those really quickly just so you know where we're coming from. The first one is the permissible gifts and prizes. Our board policy actually has our threshold limit at $100 on both the raffle prizes and the other things. And I know that's probably going to be too low for my PNC friends, but to put it in perspective of the life insurance industry, on some of our products, they don't even pay $250 for the premium. So if you can rebate them more or give them a gift that's worth more than the premium they're paying, we don't think that that's a wise decision on the life side. So I don't know if people want it higher than $100, maybe we bifurcate between PNC and life. I'm not sure, but that's why we see a problem with raising this beyond $100, which is where we currently have our board policy. The majority of what we concentrated our comments are section 4, and we have no problem with the language that the APCI has put forward. It just doesn't go far enough to bring in types of services, and we do call them value-added services because we think they add value to our product, and we'd like you to keep that phrase in the legislation. But we added a simple sentence that said to have a nexus to or enhance the value of the insurance benefits. An example of value-added services that we provide to our customers are will preparation services, grief counseling services, repatriation of a body if you happen to pass away overseas, financial wellness issues. All of these are primarily assisting the beneficiary. So anything that's not included in the contract but goes to enhance the experience of that policy, we consider that a value-added benefit, and we'd like to continue to be able to provide those services. So the other thing that's at the end of our language, we felt this was the appropriate place to address it, and that is the use of implementation credits, which we believe need to be distinguished. And we would prefer that those be written in the contract. We did not want this to be used as a method to do implementation credits without disclosing that in your contract, and that's why we added the language at the end. And then again in section 5, just a clarification that these do not otherwise qualify as permissible value-added services that are up above. Because frankly, if you're offering something to everyone, regardless of whether or not they purchase a product from you, that's not really a rebate. So we just wanted to distinguish that between what was up above. And we look forward to working with Representative Lehman and the rest of the committee on perfecting the language. But we do appreciate these efforts and look forward to further discussions, and I'm happy to answer any questions.
Thank you. We'll now open it up to members for questions and comments, and we'll start with Representative Lehman.
All right, thank you. Just a couple of things. Thank you very much, everyone, for your comments and your thoughts on the process here. I am going to, I know this will come as a shock to you, Bernie, but I'm going to push back a little bit on a couple of things you've said. One is, I think when you said already this is being done, it's been done for 100 years. I think what we're trying to bring to this is, and I heard this at the NEIC from several commissioners, is we're investigating those things of which we think are common now, have become common. So it's not so much to say what they can and cannot do, but to stop some of these investigations that are going nowhere. Because what the departments are finding is this was a very legitimate, a legitimate act or a legitimate process in this loss prevention or loss mitigation. So it's not so much to stop, it's just to bring some common sense to it. And then secondly, as you said, to use the right term, loss prevention versus value-added services. The pushback I'll have there is I think there's still a lot of things added or offered that are not loss prevention. I know MVRs for trucking risks. A lot of times we'll provide, if I want to do that and there's a $4 fee from the state, can I provide that to my client? That's not really a loss prevention. It's really a hiring practice. We provide educational materials to clients who maybe want to pursue a different route and what the insurance will do to them if they go down this path. They're provided materials. Is that a value-added service? Is there a cost to that? So I don't think it's entirely, it's focusing on loss prevention, but I don't think I would change the verbiage because I do believe it's all value-added services. So with that, I think what I'm hearing from everyone else is it's really coming down more to terminology and some tweaks to these sections. I think I'm hearing kind of a support of we want to continue to move forward. I agree with you, Wes. Maybe there's some things we narrow down to address a little better. But it is a work in progress. I look forward to the input from everybody over the next couple of months as we prepare for our spring meetings. I'd be interested to hear from my colleagues. And I'll just end with this. I've always been jealous that Blade Morrish has a nickname. And when you said chainsaw, I kind of like that. So I'm gonna go with that one. But I am curious to hear what my colleagues in some of their states are doing or thinking. And again, thank you all for your input and look forward to working with every one of you.
Any additional comments or questions from committee members? Representative Kaiser.
Thank you, Mr. Chairman. And, I do support Representative Lehman on this issue. We've had legislation in our state. We made the changes. The reason you're seeing a bulletin, and Wes, there is no way we're going to put in the statute every possible contingency that's out there. And that's why we have commissioners. And that's why in our legislation, we gave them the authority to regulate and to write administrative rules as things develop. And the other comment I'd make, and I agree with Representative Lehman, and I don't know how you'd categorize this, Bernie, but recently I was looking at a fairly old building for purchase. And one of my concerns was, how much is this going to cost me for insurance because of some of the characteristics of the building? So I asked my agent, I haven't bought the building. I, in fact, didn't buy it. But I asked my agent, run by and look at it and tell me what you think, if there are any problems with insuring this piece of property. I guess it's loss mitigation in a way, but I didn't even own the building. But I would like somebody with expertise to look at it. I also had an engineer go by that's a friend of mine and said, I don't want to be billed, just go look at it and see if you see anything that jumps out at you. No, I'm serious. I'm cheap. But that's why you have friends. And I'm really serious that we can't anticipate every possible contingency. What I really liked was the commissioner's statement, we're not obeying the law now. Boy, if you're not obeying the law now, we need to change it. And this really isn't rocket science, as far as I see, but for what it's worth.
Any other questions? Senator Doms.
Well, thank you, Mr. Chair. And Bernie, I guess I'd just like to comment on one of the things that you said about loss. It should be called loss prevention instead of value added. I don't agree with that, and I think it's really unfortunate that today we're here and we're talking about splitting hairs on if it's going to be loss prevention or value added. We realize there's some bad players in the industry. There always is in every industry. But for the majority, the people in the industry are very good players. And they're not doing this always just to pad their pocket with another dollar. They're doing this to help their insureds. And it's not always about the dollar. It's about helping your insureds to grow your business and also keep other people's rates down. If you do some loss prevention or value added work and you prevent a claim, certainly it helps the person that you have insured, but it also helps a lot of other people in that same classification, because as insurance is, we do pooling. And so I guess I get a little frustrated when we're going to sit here and pick hairs on if it's loss prevention or value added. I think we need to be addressing some of the real issues, but thank you.
Any other questions, comments from members of the committee? Panelists? Commissioner?
You know, one of the problems of going first is that you think of other things you should have said and other things that that others said that maybe make you want to push back. So, first of all, extend again the invitation. The NAIC doesn't move as fast as Representative Lehman, or NCOIL for that matter.
I've never been known to be fast. I'm sorry.
Well, that's better than being half-assed. We're grateful for the opportunity to work with you, because we recognize there do need to be some things that are addressed. And I think Bernie does bring up some good points that I think, particularly in the big data society, that we're going to have to think through a little bit carefully and be methodical and slow and process it. I'm a little shocked because I don't think any commissioner, and I challenge any of the panelists to either privately or individually tell me of a case where a commissioner has enforced them from being able to provide services to their client. That's not happening. And to say that it is, or that they're unable to do the service sort of bothers me. I'm also disappointed. You know, we have these wonderful little devices, and I was a little shocked at the comment that was made that Massachusetts had taken issue on a stress ball. And so I sent a quick little text to my friend, the Commissioner of Massachusetts, who said, well, I can't really say what he said. It was kind of akin to what comes out of the north end of a southbound cow and what we'd see in Idaho. He said, not only is that not factual, but they have been some of the first to offer devices, wrist-bearing devices, allowing Hancock to offer Vitality Pro shoes, all kinds of other devices. So I think as commissioners, we're trying to find a solution where we're helping the consumer, where we're allowing the consumer to be protected and progress, but we do want to make sure that it's not done on a discriminatory basis, and we want to make sure that we don't go back to the era where there is rebating of a person's premium. I think that's the concern that we have. So I'll stop there. I probably got myself in a little more trouble than I intended, but our plan, our task force, by the way, is addressing the Unfair Trade Practices Act. Our plan is to have that finished by the end of 2020, which again is not the same light speed that you're operating on, but we would certainly like to collaborate with you as you are developing your piece, because I do think there are components that we will want to be able to see and be able to add comments to as you move forward. So thank you.
Mr. Chairman, can I just address that right now? Because I want to say, Superintendent Cameron, or Commissioner Cameron, I know in the meeting on Monday that the working group you have formed a drafting committee. And I made the comment, I think, the other day that I said, I know NCOIL would be more than willing to participate in that drafting committee. I didn't know if we were, as possible, since we're not part of the NAIC, and I was told we could be. I want to offer not only my services, but anyone else from NCOIL that want to be a part of that. We're here to work with you on that. And so I want to publicly offer that to you as, let us help you as being a part of, if we can, be that drafting committee.
Bernie, go ahead.
Thank you. First is I have a nickname for Representative Lehman, but I'll tell him after the meeting. But the second is that I really welcome you pushing back on anything that I say, because from my perspective, it's an opportunity to engage in a dialogue and explain to you why I'm right. So, so thank you for that. From our perspective, words have meaning. And when you go to a consumer and you say, hey, we've got this great product with value-added services, that doesn't tell a consumer very much. On the other hand, if you tell a consumer, we have an insurance product, and by the way, I can provide a bunch of loss prevention, risk mitigation services to you. Those words have meaning to a consumer. So that's why we sort of bring that issue to your attention. It's not an effort to sort of quibble about things so much as let's make clear to the consumer what it is that they're getting. So thank you again for your work on this, and I look forward to getting a finished product this year.
Any other questions, comments from panelists or committee members? Representative Lehman, any final comments?
No, thank you again for all your support and work on this, and looking forward to the next couple months.
All right, that concludes the committee meeting, and I'll need a motion to adjourn. We are adjourned.